Hey, everybody, welcome to the Mansfield Buzz. It is Thursday, August the 8th, and we're here every Thursday right here live on YouTube. If you want to join us, let me go up here and click on some banners and show you exactly where you can find us. You can find us on youtube.com at Mansfield TX Buzz. Please go subscribe and click the notification bell so you can go check out all the past archives and all the other businesses in Mansfield we interviewed. Today, you've got Herdy, a host, Jordan, a host, and Karen Ray from Farmers Insurance is going to be our guest today. And we have some questions for her. So we want to welcome everybody to the Mansfield Buzz, and we welcome our guest, Karen Ray. And Jordan, how are you, sir?
I'm good, man. It's good to have you back because I didn't have to do that part.
Well, I was just getting ready to say thank you so very much for last week. Jordan filled in. I had to go down and visit my mom in Austin. She had a little bit of surgery. Everything's really perfect. So thank you for all you people that asked and sent me prayers and also sent me some emails. She's fine. Everything's great. And it's fantastic that we're all back together. But Jordan did a great job. Now, I got some other great news on the YouTube channel. Jordan, just for your FYI, as you know, we launched this in March. We haven't really publicized it. We just jump started this as an idea, thought we'd interview local businesses. Well, guess what? We had 53 subscribers. We're working on getting 100 by the end of September, which I think is going to happen. 2.7 thousand people have watched the channel in the last 28 days and 42 hours of watch time. And guess what Google likes? Watch time, especially YouTube. So anyhow, welcome to Mansfield Buzz. Karen, say hi.
Hi.
Well, we want to welcome you to the Mansfield Buzz. And Jordan, the cool thing about having Jordan on this is I'm kind of the rock and roll and Jordan's kind of the laid back. Okay, so he gets to ask you questions, and if I get to interrupt the whole show. So anyhow, Jordan, take it away.
Definitely. Now it's up to you to see who has the most fun in here.
You.
I think I do.
You do.
Well, hey, Karen, welcome to the show. Thanks for coming. It's going to be fun.
Thanks for having me.
Trove of information. You definitely know your stuff. I know you personally, right? I've met you through the Mansfield networking community, and I mean, it seems like I see you everywhere. So I think you are everywhere.
I feel like it.
But one thing I can tell is just about everybody that I know that has worked with you, you have saved them a ton of money. So I know from third-party independent analysis, right? But you know your stuff. So I'm excited to ask you some questions today and get some knowledge. Like, let's get the download.
Okay, I'm ready.
You're ready? Okay, let's do this. So first, let's talk about home insurance, right? Because there is so many different kinds of insurances.
Mm-hmm.
And it seems like we go on in time, like there's even more categories that prop up. So. And I know you have some little goodies coming up later towards the end of the show. So if you stick around, you'll get to find out some new cool upcoming insurances. But let's begin. Can you tell me, when it comes to home insurance, what is the difference between replacement cost and actual cash value? Because I've seen that on like insurance quotes. Or I mean, when I read the paperwork, and I mean, to me, it's just gibberish. Like it's so difficult to understand that I'm just like kind of gloss through it and pretend that I know what I'm reading so I don't look dumb. But to tell you the truth, it confuses me. So I know this is an important one. So could you tell us the difference?
Yes. All right. So and I'm going to start with the auto policy, even though we're talking about homes, but everybody can relate to an auto policy much easier than a home policy. So anytime, let's say you totaled your vehicle, it's going to be depreciated. We all know the minute we drive a car off a lot, it has depreciated immediately. So when a car is totaled, you get the depreciated amount. We're not going to pay for a brand new vehicle unless you insure for a brand new vehicle, which you can do, but we're going to only give you the value of that car. Same thing goes for your home. You can choose actual cash value or replacement cost on the home, and on the goods in the home, and on the roof, which is really the thing that most people care about, at least here in Texas, is the roof of the house. That's our number one loss here. So you can have replacement cost on the roof, which is what most people want. That means there's no depreciation taken. We'll pay whatever it costs to get a brand new roof today, of course, minus your deductible, because everybody's got a deductible. So you have to pay some, just like you do for your medical insurance. You have a deductible. So if your roof reaches a certain age, and with every insurance company, it's different, then you go to what is called ACV, or actual cash value, which means when your roof needs to be replaced, first of all, they take a depreciation. So let's just say your roof costs $25,000 to replace, and you have a $5,000 deductible, but it's a 20-year-old roof. So at a 20-year-old roof, the insurance company is probably going to pay 50% of it. So now you're already down to $10,000. Then you take your deductible of $5,000 off, you're down to $5,000. So for a $20,000 roof that's on actual cash value replacement, you're going to get $5,000 from the insurance company.
Wow.
Does that make sense?
Yep. And,
So
and
you want to look and make sure you're on replacement costs as much as possible. But again, when your roof hits a certain age, you don't have a choice.
yeah. And so, Karen, does that include, what about actual contents? If you ever have a loss inside, let's say you have fire, let's say you lose everything. How does replacement costs work on contents? Is it based on the value of something today, or is it depend? You know where I'm going with this question.
Yeah. So
okay.
I always put everyone on replacement costs, because I want them to get the same like and kind that they have now, and not, something at a used quality, so to speak. So I always put everyone on replacement costs. Replacement costs on a homeowner's policy your contents, on a homeowner's policy, are based on the value of the home. So, and generally, it's 55% of the value of the home. Okay. So you can lower that if you want to, but that is the average number that people go with. So if your house is completely destroyed and you had $250,000 worth of insurance on your personal property, you would get a check for that.
And one more thing, do you recommend people that have special things in the house, that they take pictures? Does it always help to have documentation in a file somewhere offsite, like pictures of certain things, jewelry, the kind of things that, are ambiguous in price that you have to prove?
Yes.
Okay.
There's a caveat to that. If you have expensive items like expensive jewelry, expensive guns, collectible art, rugs, imported rugs, things like that, you definitely need to keep pictures of that stuff. But you also need to get what's called a floater on those things.
Aha.
So you have a jewelry floater, you have a firearms floater, you have a fine arts floater, and those things are covered separately. The beautiful thing about that, when you have a floater, is, well, first of all, you turn in an appraised value for it. You say they have to be appraised, or you have to have your original receipt to go with it. And then we itemize those on your insurance policy. If they are stolen, lost, like seriously, let's say you go on vacation and your wife drops her wedding ring in the ocean. It wasn't stolen. You know exactly where it is. It's at the bottom of the ocean. You would get to replace that if you kept a jewelry floater. If you don't have a jewelry floater, you have very low amounts that are covered, and you have to prove that it was due to theft. It can't just be because it was destroyed in the fire. It has to be due to theft. Jewelry, watches, firearms, those sorts of things.
Wow.
And cash is another thing. If you keep more than $250 in cash to $500, and every insurance policy is different, that's all that's going to be covered, even if it's due to theft. So don't keep a lot of cash at home. It's not going to get replaced.
Gotcha.
Mm-hmm.
Wow.
What about,
good to know?
Thinking about that too, we have a lot of entrepreneurs that, are in the groups and, are going to be watching this. People like that, a lot of people work out of their homes, and you have professional equipment at home. For example, I have a lot of video equipment.
And what time do you go to work, Jordan? We'd like to know. No, I'm kidding.
I'm always home. Everybody watching, I'm always home.
Doggone it.
But and I live in Alaska, by the way.
Right.
But people that work at home and they might have expensive equipment they use in a business at home, like how does that start playing into that scenario?
Well, that's one of the things you need to let your insurance agent know, that if you have a business that you run from home, there is a little bit of coverage that can be added to your homeowner's policy for that. But I highly suggest you also get a commercial insurance policy. Like, if not just because you're working out of your house today, but if you genuinely are running your business out of your house, I really think you need to get some sort of a business owner's policy as well. But
And
you can't put a little bit of your business property on your homeowner's policy.
wow. So what about renters? I'm sure you sell renters insurance too for folks. There's generally minimums put out by apartments that they like to see, and then there's maybe 27 or 30,000, blah blah blah. It covers everything. You still have to itemize those special items and have a floater policy, correct?
Absolutely, yes.
All right. Okay.
Yep.
See, Jordan, we're asking the right questions today.
Yes, we are. So far on track. We'll see how we do here in a minute. But so we're talking to the people that are being very prudent. Let's talk a little bit about the people that are maybe not so prudent, right? Mm-hmm. So sometimes people suggest like lowering the price of the dwelling to lower the price of the insurance. Is this a good idea?
Well, I think we all know no. It's not a good idea. Everything is driven off the price of the dwelling on your homeowner's policy, your deductibles, how much you're going to carry in personal property, your separate structures, like your fence and outbuildings and things. Everything is kind of driven off of that price. And of course, the premium is as well. Here's what happens. We figure out what the reconstruction cost is going to be for your home, and we input details into the system. We tell it if you have marble countertops, granite countertops, do you just have laminate? What kind of flooring you have? Do you have decorative windows? Do you have a decorative staircase? How many walk-in closets? Like, all of those details go in, and it generates what is called a reconstruction cost on your home. Well, some people don't want to insure their house for that much. Maybe they don't owe that much on their home. Their loan on their home isn't that much, so I don't want to insure it for that much because I want my premium to be lower. The problem with that is the insurance company says your house costs this much. And if you decide you only want to insure, let's say 80% of that value, then what you're basically telling the insurance company is, I'm going to co-insure this with you. Insurance company, you insure it 80%, I'm going to insure it 20%. So anytime something happens, you not only pay the deductible, but you're going to pay another 20% because you have co-insured with them. So if that's something you can afford to do, then do it. I do not suggest, though, that you do that. I mean, I would rather pay a couple of $100 a year more and insure it correctly than be out thousands because I chose to co-insure.
Yeah, and I would think that's, I could see where with the inflation going on, Karen, where people are trying to make honest evaluations of their budget and they're just having to cut some things. But I would say the one thing you probably don't want to mess with is the dwelling, right? Your actual home, because that's where everything starts in your life. Maybe there's other areas and other insurance stuff you can adjust, but leave that home policy at the best maximum place you can be.
That's right. That's right.
Plus, I'm sure a little later on you'll give us some tips on how to save on insurance without like jeopardizing what we're, our coverage.
Yeah.
And you'll have to excuse us. Jordan has a kennel at his house, and that's the reason.
I wondered where that was coming from.
I'm kidding.
Oh.
No, I just
he does have a dog, but I'm just messing around. So this is funny. See, this is what I mean by
decisive ponies. So that's what we can hear from all the way there.
This is what I mean about making the show a conversation, and just being like we're around the kitchen table having fun. So there you go. All right, Jordan.
Let's go down the list too. So also, I know there's a lot of other things that stack on top of home policies. And one of the ones that we look at quite a bit is the personal liability, personal injury, and guest medical.
Yep.
And I'm, for myself, like I'm familiar with personal liability, personal injury, guest medical. That's a little bit new to me.
I bet you don't know what personal injury is. What do you think it is?
I mean, I think it's whenever people get hurt at your house, right?
No.
Oh, no. Okay. No. Okay, I'm interested.
No. So personal injury is when you injure someone with your words. Something you put on the internet, something you put on social media.
You're kidding me.
No, sir.
Oh, man.
That's personal injury.
Whew.
So
Glad you
you
told
are
me.
injuring them personally, not bodily. So what you thought it meant was bodily injury, but it's not. It's personal injury.
But isn't that open to misinterpretation?
Of course it is.
Okay.
But that doesn't mean you can't be sued for it.
Oh, you
We
could
can
be sued for anything.
anything.
You could be sued for
Yeah,
anything, right? Yeah.
Absolutely. Yes. So personal liability is if somebody is bodily injured on your property and they want to sue you for that, then you are covered. Your personal liability on your homeowner's policy pays for not just the fines or whatever that person may win from you, but it's also going to cover your lawyers. And if you're with a good homeowners insurance like Farmers, you probably don't even darken the doors of a courtroom. They are going to take care of everything for you, including paying any fines if you lose. But that's rare. But that's what that covers. Personal injury, again, is going to be your words that are insulting someone's person, not body.
If we pay a little extra, can we guarantee it injures the person?
No.
So that reminds me of a good point. So then you have people, Karen, like yourself, that probably sell an accidental policy, which can help with you getting hurt at your home, because getting hurt at your home is not counted toward your homeowner's policy, correct? So
Correct.
A lot of people misunderstand personal injury. Say, I fell off my ladder and I'm going to call Karen because I have a homeowner's policy.
Right.
They need a separate accidental policy, correct?
Correct. Yes. And I don't sell those.
But that's okay. There's plenty of supplement companies out there that
absolutely.
do.
Yeah. That's with the health insurance.
Right. I think Jason Randolph in our group does that. So
Yep.
just people think that their homeowner somehow is going to cover them falling off a ladder. So just thought I'd throw that in. All
yeah.
Right.
So then that goes to the guest medical. So guest medical is if you have someone at your house that's a guest, they're not suing you, which would fall under liability. They're just injured and they have to go to the hospital. Generally, that people carry anywhere from $1,000 to $5,000 on this, and that is to pay for any out-of-pocket medical expenses they may have. I call it kind of a Good Samaritan insurance, because everybody has a high deductible on their medical insurance. So this kind of helps pay for that.
Absolutely.
But it's not for you. It's for guests at your house, not family members.
All right.
Oh, it doesn't. But family members, even if they don't live with you,
that is covered. Just so they're guests. But I meant household members, people that live in the house.
Right. So we're at that 18-minute mark, which is great. Time flies. Before we get the audio insurance, before Jordan jumps in there, Karen, you got something special that's really cool. I'm a part of that. So you tell us a little bit about that, if you don't mind.
No, I don't mind at all. So I am part of the Harvesting International Ministries, which is here in Mansfield. It is a food bank, and food banks in turn provide food to food pantries. And they service all the food pantries around here within like 100-mile radius of them. And I could be making that up, but it's a whole lot.
Yeah.
So don't quote me on that. Anyhow, we need donations. We need more donations. And there's lots of different ways that you can donate. I will tell you, $25 a month feeds one family. $50 a month will feed two families for a month. So, do you want me to show the QR code?
Yeah. Hold it up for at least 30 seconds. Drop it down just a little bit. There you go. People, you can actually scan that and set up a monthly donation to them. I have a monthly donation with them. I've turned some other people onto that, why it's holding up. And it's worth it, because the fact that just because you think people are doing well, don't assume that.
No.
They need help, right?
No.
You need help.
You would be surprised how many people, are professionals like us three, and they get laid off just very unexpectedly, and they need help until they can get back on their feet. The good thing about the HIM Center is they, it's not a forever thing. They really help people while they're in need, but in 3 months, they really want that family to have found a way to support themselves and to move on.
Yeah, perfect. I love that.
I do too.
Yep, great organization. It's worth $25 a month. I guarantee it.
Easy.
All right, Jordan.
Okay, that's awesome. Thank you for sharing that. And anybody watching, like the video is still going to be in the recording too, so they'll be able to go back and scan that as
Good.
we get more viewers. But going back to our questions, we now completed with house. Now we're going to go on to auto insurance.
Oh
Okay.
boy. Oh boy.
I think that's everybody's favorite,
I
right?
know, right?
So there is, we're going to start seeing a theme here, right? Like, how much liability do I need to carry? Like, the more I have, the more I pay. I want to do less, but then I'm exposed, and
Right.
how much, like, it basically comes down to risk, right? How much risk do I want to take?
Exactly. That's exactly it. How much risk are you willing to take on versus how much do you want to share with the insurance company? So state minimums for Texas are 30,000, 60,000. And what that means is if you cause the accident and somebody is hurt physically, that's the bodily injury thing again, $30,000 for one person or $60,000 for multiple people. So it could be 10 people. So really you're only spending $6,000 per person. If you kill someone, then you can expect $30,000 is not going to cover the liability that's going to take, because I guarantee you that family's coming after you. So you have to decide, how much can I afford? So let me tell you this, those guardrails on the side of the road, if you just run off the road, no other cars involved, and you hit that thing, the state is going to send you a bill for that. You know how much those are?
What?
$25,000.
Oh, good.
So
Nice
your
to know.
state minimums are, and state minimums are usually 30, 60, 25, 25 meaning for the property. So if you have state minimums, you're just barely covering that. Okay.
Unbelievable.
Okay.
Wow.
So you have to decide how much are you going to be responsible for, because if you say 30, 60, 25, that's not covering a whole lot. Let's say that's what you have and you cause an accident, multiple vehicles, and you've got to pay for all those vehicles to get fixed. $25,000 is not going to do it. So the insurance company is going to pay everybody $25,000. Who do you think is responsible for the rest of that? Exactly. You have to pay that. Same thing with the bodily injury. If you, and I keep thinking back, remember the big pileup on I-35, and it was just car after car after car.
Yeah.
Do you remember that several years ago? Yeah. So I don't know how any of that played out with the insurance, but just think about something similar, not to that extent. Pileups happen, multiple cars just at a stoplight, 3 and 4 cars just bang into each other. Well, the person who's responsible, it's usually the one at the very back who's rear-ended everybody else, they're responsible for all of that. Your state minimums are not going to get you covered. So you're responsible for either all their bodily injury difference between what your insurance pays and what they're asking for. So I wish I could say there's a magic number, but state minimums are not the magic number.
Yeah, I think I carry 100, 300, 100, and and it depends how much you drive, how much at risk you are, right? If you don't drive that one car a lot, well then you're not apt to have it goes down, your risk goes down. But if you're in it all the time and you're in a commercial vehicle, which I imagine if you got a sign on your vehicle and you hit somebody, they're going to go,
Yeah.
That's a good point. Yes.
So the other thing I want to say is, and a lot of people carry umbrella policies, which is another layer of liability. So if you want an umbrella policy, then you have to have 250,000, 500,000. That's the minimum in order to get an umbrella policy.
Yeah. And I think an important thing to know, because I have an umbrella policy, so I've been through this conversation, is the reason why that, we'll talk a little bit about umbrella policies here in a little bit, but the reason why it's that is because that, according to insurance, who know a lot more about these statistics of things, that is really what's going to keep you safe.
Yeah, really is.
So Karen, when it used to be in the old days, and this is not a slap on insurance. It's just a way they probably had to figure out to make a profit, right? Because we live in times where people are wrecking all over the place and doing stupid things. So it used to be, if I had a great driving record, no tickets, I walked into your insurance office and, oh, Herdy, you're a great driver. You've never had tickets. Here's your rate compared to John down the road that's hit 3 people. It seems like nowadays the risk is spread out per the county you live in or the city you live in, or so is that kind of now the trend for gauging what a rate is?
Yes, that's part of it. Your zip code is part of it.
Okay, got it.
And it's based upon the driving habits of the people who are driving in your zip code. Okay.
Oof,
how many
wrecks zip codes must be like super expensive.
Right. And the more dense the zip code is, the more drivers that are on the road, the higher the price is going to be, because the higher the risk is. And your price is not only based on your driving record, it's also based on your credit score.
Right.
So a lot of people don't realize that, paying bills late, it doesn't just affect, your credit and the interest rate you get at banks and on other cards. It's affecting your rate on your home and auto insurance as well.
Yep.
So all this play a part.
Goes with the responsibility angle.
Right.
So Jordan, let me lead off with this one. I'll let you jump in because I have a 2011 Hyundai Accent. Ready? Hyundai Accent. I actually use this car for storm warn or sky warn, right? It's got hail dents in it. Don't fix it. Just keep it well maintained. Okay. But because I am on the road, I carry the 100, 300, 100 on it. The car's not worth what, if it was totaled, they just give me a check and say, have a good day and be done with it. But because of the idea that you could possibly hit somebody and hurt them, it has nothing to do at that point with the car.
Right.
And I think people just need to understand that the car itself is part of it, but it's really the other stuff that's the most important part. What is your medical pay? What happens if you're sued? What happens if you're, auto insurance to me seems to be a very, really important thing for people. Now, what about uninsured? So I on my policy, I have an uninsured motorist clause in mine, which means if somebody hits me without insurance, I can file my uninsured. Yes. Does that hurt my rate or is it okay?
No, that doesn't hurt you at all, and your deductible is less on that. It's usually only $250.
Good. Okay.
But yeah, and you would be surprised how many people are driving around without insurance.
It scares me.
And I don't think some people know this, but policemen have these cameras in their car and they're scanning your license plates. Right. And it tells them whether that driver has insurance or not.
Super.
So, and they can just pull them over for that reason, for lack of insurance. But I don't know that they've got time to do that, but they have the technology. I just don't know if they have the time.
Thought I'd ask.
Yeah.
But to get a little bit more specific too, like what is the difference between and I'm assuming this is comprehensive and collision coverage?
Yeah. So it's interesting. People will call me and have a claim and they don't know the difference. It's surprising. Collision means your car is in motion. You are moving that vehicle and it has made impact with something else. Period. That's what collision is. Comprehensive coverage is a tree fell on it, hail fell on it, it was stolen. That would be comprehensive coverage. So a lot of people don't carry comp because their car's paid for. So I always ask them, if you had a total loss of your vehicle, would you be comfortable making new car payments? Because if you're not, you need to go ahead and carry comp for an extra $50 a month instead of paying an extra $300 a month for a new car if your car gets stolen. And $300 a month is probably pretty low.
I don't think you can get a car for that now.
I don't either.
By the way, Sandra Fawcett says hello. You see her in the bottom of the chat. She just
chatted
hi.
Yeah.
And so we have a few people that have commented. Let me show you this one. You probably recognize this person too.
Yep.
She's been chatting with us too. So there you go. Just want to thank those folks. And let me get back to the next section. Jordan, I'm going to click it for you right there to lead you into that. There you go.
Ooh.
Fun stuff.
Before we go on that, let's get a little deeper into the umbrella policy, because these are really cool. I love them.
So an umbrella is an extra layer of liability, and it covers everything you own as long as you put all your other insurance policies underneath it. So it can cover your car and all your cars and all your drivers in your home. It can cover your home and your property there. If you have property elsewhere, let's say you have a vacation home or a vacant piece of land that you're thinking of building a house on, it can cover that as well. So anything where people can be injured by you or your property, even if they don't have permission to be on that property, they can still sue you for that. An umbrella protects you from all of that.
And how are they costed out?
Oh my God. $1 million in coverage is usually $500 a year.
Really?
They're incredible.
But you have to have the underlying liability limits on your automobile, which is $250,000.
So you'd have to increase your 100, 300, 100, and then can you sell an umbrella policy outside of the other company that offers the insurance, or do you have to have both? You have to have both the car, or do you have? Okay.
No, you can buy a standalone umbrella policy. You may have your auto with one company, your life with one company, and your umbrella policy with a whole nother company.
Okay.
You just have to list all those underlying policies on it.
And just make sure you've got the right coverage on those other ones. Okay,
yes.
cool.
But
that's good to know.
You'll get a better deal if you put it all together.
Absolutely.
Because you're going to get a discount on each policy for the other two.
Absolutely.
So it's much less expensive.
When I went ahead and did that, the cost wrote itself out by just adjusting everything, and then the discount by adjusting everything is the same exact amount, and there's $1 million umbrella policy covering you.
Yes. And I'm going to tell you, and I know we're getting into life insurance, but another thing is when you also bundle life insurance onto these, the discount becomes so deep that your life insurance policy is free, essentially, because you're saving so much on the others that you're going to pay the same amount, but this is going to end up being free. So I'm like, throw in a life insurance policy. If you're going to pay, X amount of dollars a month, you might as well still pay it and get another policy.
Yeah.
And Karen, Christy Brown says, hey.
Hi.
So you got all these friends of yours and probably clients checking in on you, which is really cool. We always like to see that in the chat. Thank you guys for chatting with us.
Yes.
And by the way, if you are chatting, we're posting that and you're seeing yourself on the screen. So that's awesome. All right.
And it goes to show, right? Like when you're stacking all this insurances and like just going through all the different policies that you have, like a savvy agent is a strategist, right? Like you look at how to structure all these things to get everybody the most protection. And as we said, like it is possible to stack these things together so they give you discounts within each other.
Yeah.
So then you mentioned life insurance. So let's talk a little bit more about that, because that's cool. Like I can support my other policies and then just get a discount. Like this is starting to get really interesting.
Depends how old you are.
And it's my favorite thing to sell. I love life insurance. I believe in life insurance. I think everybody needs it. And I know, and I've been told there are people who think I'm not leaving life insurance for my kids. I have to work for mine. They have to work for theirs.
Savage.
It is, right? So I don't understand that philosophy at all.
Loser.
I really believe in life insurance and leaving a legacy behind. I don't want to leave my loved ones without something.
Absolutely. Yep.
Yeah.
My father got killed in 1983. IBM, life insurance, bank insurance, had a whole life policies on bank accounts, all that ended up securing my mom for good. So, you don't think about it till you need it.
Right. And I'll tell you something else you just made me think of by talking about your dad having it with IBM, because a lot of people do have life insurance through their job, through their employer, but their employer is the one who owns that policy, not them.
Absolutely. Yeah. He had both.
Yeah, smart man. Because if you quit that job or let go from that job, guess what? That employer
Bye-bye.
doesn't want to pay for your life insurance anymore.
Bye-bye.
And so it's gone. Yeah. And then now you're older, quite possibly have developed some illnesses, and now it's going to be really expensive for you to get life insurance. I made that mistake.
I mean, it happens a lot, right? You think your employer is offering it to you. Like, I mean, I had that for a while until I started looking at independent ones, and it's such a better deal.
Yeah, it
Like,
is.
you know what you're paying it's crazy, and you're getting taxed on that, which I don't think people realize that.
I know.
What, like the life insurance that your employer pays for, you know, you're
Yeah.
paying a portion of, they're paying the other half, but what the part they're paying is part of your compensation, and you get taxed for it.
Yes,
And I
sir.
think they get a tax break.
Probably. Yeah, I think they do too.
Yeah.
Yep.
So what different types do you sell? Because they're like
Okay.
life insurance. I mean, we
There's
can open
tons.
Pandora's box.
Yeah, there's a whole lot, but I really try to focus in and know the policies well and not try to sell a whole bunch of everything. I am a firm believer in being good at what you do and not try to wrap your arms around every single thing. But the ones that farmers provides us to sell, I'm a firm believer in. We have term policies, 10, 20, and 30-year terms. And then we have a whole life policy. And then we have indexed universal life policies. Those are the ones that I can sell. And I love them all. My favorite two are the term and then the indexed universal life,
Sure.
IUL. Those are my two favorites.
And can you tell us a little bit about the difference between them?
You sure can. So I want you to think about a term policy as being like renting a home. So you don't really own it. You're renting it for a select period of time. So you're renting this life insurance policy for 10, 20, or 30 years. Now you've signed a lease, so your price is going to stay the same for those amount of years. But when those years are over, what happens with your lease? Most likely, the price goes up. And that's what happens with the term policy. It's not ended at the end of that term. It's just your price is going to go up at the end of the term. Okay.
Yeah.
So the fewer the years, the lower the price, because the sooner your price gets to get raised. Okay. So if you get a 30-year term, it's 30 years before they can increase your price. But at the end of that term, your price goes up. The fees are really, really low. Just like with renting, somebody else is going to pay for the maintenance of that house, so that your fees are low with a term policy. Whole and index universal life policies are permanent. There is no end date. I think it's 110. So I don't think any of us are going to live that long, at least not yet. I know they're working on it. But it's going to last the rest of your life as long as you keep paying those premiums. And they both create some cash value to them. My favorite of the two is the indexed universal policy, because the money seems to grow faster in that. And I know it depends upon the year and how well our stock market's doing and all that stuff, but it tends to grow a lot faster. And you can get that money tax-free. That money is protected from creditors. So your life insurance policy and the cash value that's in it is always protected. So when you think about somebody, and I won't use his name, but it's a very famous person who helps people get out of debt. He always says to you, buy term and invest the rest, right? You know what I'm talking about? Buy term insurance and invest the rest of your money.
We know who you're talking about.
Okay.
Yes.
So here's what an index universal life policy is, kind of like that. Just like you're paying rent on this term policy. Well, with the IUL, it's a renewing term policy. It renews every year. So follow me on this. It gets a little in the weeds,
Gotcha.
but you're going to pay a certain price for this insurance for the rest of your life. And you and I are going to agree on a price. Okay. You're going to pay that price every month. Well, every year you're going to pay, let's just say you buy this at an age to where your life insurance policy only costs $20 a month, but you're agreeing to pay $150 a month. So 20 goes towards your insurance, the other 130 we're investing for you, and it's going to earn accumulated interest. The next year it may cost you $20.50, and we're going to invest the rest for you. And every year after that, And that money over here in this investment just keeps churning and churning and churning. Now you're going to get to a year where you may be 85 years old. The price of your insurance is now $160 a month, but you've agreed to only pay $150. So that other $10 comes out of this little fund we've been accumulating money in to pay the insurance. It never costs you more. The other good thing about these is they can be used for retirement plans. You can put enough in them to where you say at 65, I'm done paying, and I'm actually going to start pulling out $50,000 a year, and the money still is growing and accumulating interest, and you never run out. And when you pass away, not only do you have the death benefit that comes with the face amount of that policy, but you also have all this cash that still goes to your family as well, and it's all tax free. That's the best part of it.
And I would say, Karen, that when you sit down and visit with folks and go through these options with them, it depends a lot on their age, right? Because premiums go up as you get older. Your risk goes up. So everything, I would say, sit down with Karen and kind of get, tell her where you're at, tell her what you look for. She can put the nice thing about insurance is you can buy as much or as little as you want.
Exactly.
Which is nice. So if you're young, and I know one other thing about life insurance, which I always hear you talk about in our group, and I think this is really cool, is I've been hearing you talk about insure your kids while they're young, get them in a policy because the premium's so darn cheap, right? By the time they're 20 or 30, they've got a paid off cash hog or policy that they can either keep intact because, or invest it toward another policy or use the cash, right?
Yes. Yeah. So the thing about juvenile policies is you can get the face value really low, and there is a total amount you can put in, like you can never exceed that amount, or it becomes a modified endowment account or a modified endowment fund, and we don't want that to happen. So we'll tell you, you can put as much in here as you want up to this certain amount. And what I like to do is buy $50,000 face policies for kids, and then give them what's called an increased death benefit, which means the debt, it may start out at 50, but it's going to keep growing 50, 51, all, up to could be 700,000. Depends on how many years they keep it in effect.
Cool.
But you could pay as little as $35 a month, or you could pay as much as $135 a month on that policy, and it will stay in force at 35. But at 135, you're just earning a whole lot more cash.
Oh, that's cool. Good.
It is cool. I love juvenile policies too because the kids haven't developed any illnesses yet. Juvenile diabetes most likely hasn't been found yet in them if they're going to get it. Depression, which is wreaking havoc through our teenage kids. Once a kid is diagnosed with depression and put on antibiotics, it's hard to get them life insurance because they're depressed.
Right.
So, and then there's suicide, that goes along with that. So it's really hard. So if you get a kid, the earliest we can insure them is 15 days old, but the younger you get them insured, it can never be taken away from them the rest of their lives. Even if they get cancer or diabetes or, anything, it's there for the rest of their life as long as we keep paying the premiums.
Super.
Yeah.
Good information.
Yeah, it seems like a much better like the proverbial college fund account, right? Like it's a much better way to go about that.
Well, I'm not a financial advisor, but I think so, because what if my kid doesn't go to college?
Yeah.
I've still got all this money in this account that's tax-free. The tax-free part is my big thing. I mean, I just love that it's tax-free.
Yeah. And a lot of people would appreciate something being tax-free for a change.
Hey, amen.
A few of those.
All right, Jordan, back to you, sir.
Yes. Okay. So now let's jump into commercial insurance, because that's the one a lot of us are really interested in.
Oh, okay.
Yeah,
a bunch of business owners here. So
okay,
we want the goods.
All right.
So, let's, this is a big one, right? Like what happens when a company chooses not to have workers' comp? I mean, people get hurt, and, you have employees that love you to death, and then you have some that don't really like you very much.
Uh-huh.
So this is as much to protect them as to protect yourself. So can you tell us a little bit about the situation?
Yeah, I can tell you a lot about it.
Aaron has a story, believe me, on this one.
Yeah. If a company chooses to not have workers' comp and someone is injured at the job and Lord forbid they die, I mean, they can be sued and most likely will be. If you have workers' comp and an employee tries to sue you, it will never make it to court, because what the courts in Texas will say is they have comprehensive or workers' comp insurance. You're going to have to go through that process to get paid. If you don't have workers' comp, it will go to court. You will have to pay lawyers, and you will have to fight a battle of not having to pay or having to pay.
Wow.
So you just open yourself up to all kinds of lawsuits by not having workers' comp. And Herdy, you said your employees love you and employees don't love you, or it might have been you, Jordan. And
That
it
was
just
Jordan.
it really
Mine all
doesn't
don't
matter.
love me. No.
Because think of this, even the employees that love you, they've got family members who are in their ears saying, oh, you should sue, you should sue, you should sue. You could get a lot out of him, and it's gonna happen. Workers' comp is not very expensive. As a matter of fact, it's the one thing that's gotten less expensive over the past few years. While every other insurance is going up, it's going down. And it's your price is based on your payroll, how much you pay. And yes, 1099 employees count. They are your employees.
Mm-hmm.
So if you have 1099 is just how you pay them. It's not whether they're your employee or not. It's whether you're going to pay them as a W-2 or 1099, period. They're employee. So you should still have workers' comp if you have those types of employees.
Yeah, that's good. It's a good way to get out of a sticky situation.
Yes. Mm-hmm.
And so then what is occupational coverage versus workers' comp? Like, what's the difference between those two?
Okay, so a lot of people will say, don't get workers' comp, get occupational coverage. And the same thing still applies. Occupational coverage normally will only go up to like 100,000, if I'm remembering correctly. But you can still be sued. It is not workers' comp. So don't get the two confused. They are not the same thing. They will cover, physical damages, but workers' comp, is the only one that's going to keep you from going into a courtroom.
And are the price comparable, or how come people might be choosing occupational coverage?
Occupational coverage is less expensive, and that's why people go for that. I've even heard lawyers tell people to get that. And I'll sell it to you, but I want you to also have workers' comp.
Yeah.
So lawyers then pass out the cards, their injury lawyer cards.
Yeah.
So Karen, what's an example of occupational coverage? Like, somebody gets hurt on their job that does a special skill that affects them doing their job? Is that more what we're talking about, an occupational, or
it could be anything.
It can be anything.
Yeah.
Okay. All right.
Yeah.
So again, talk to your agent.
Yes, and I will tell you, I have been talking about workers' comp.
You have
all the time.
You have.
And I guess a friend of mine was listening. He owns an air conditioning company, and he bought workers' comp the very next day. I'm not joking. The very next day, one of his employees fell through the roof and broke his back.
Oh,
and
man.
He's been out on workers' comp for almost 2 years now. And had he not had workers' comp,
Wow.
he would be paying for all the medical bills and all the lost wages for all this time.
Wow.
But instead, his workers' comp policy is paying for that.
Wow.
And that wouldn't have put this guy out of business. He's got a huge company, but he was never covering his employees. But it would put a lot of people right out of business. They wouldn't be able to afford back surgeries and physical therapy and lost wages. So
if you own a business and you have employees, get workers' comp.
Yeah.
It's that simple.
I have this little bitty office here. All we do is sit at a desk and work on a computer, but somebody could still trip and hit their head on the corner of a table or something. Like, I don't want to be responsible for that. I have workers' comp just for people to sit at the desk.
Yeah. It's also
good to know.
People.
Yeah.
So I'm interested in this next question, Jordan.
Okay.
Yeah, so we teased earlier in the program about new insurance that's coming up, and this is new, right? So please
Yes.
tell us, what is
Yes.
cyber insurance?
Well, it covers any hacks that happen where your clientele's information is stolen, whether that's their personal information, their banking, credit card information. I know we all know about the AT&T hack that happened a few months ago. Might have been 6 months ago. AT&T right now is paying for credit monitoring and identity monitoring for all their clients who chose to sign up for that. They have to pay for that. Your cyber insurance would cover that for your clientele if they so choose to have their credit and identities monitored. Cyber insurance pays for that. Cyber insurance is not keeping the hack from happening. It's repairing the damage that's done after a hack.
Yeah.
Does that make sense?
So that's getting bigger and bigger. And I just saw another breach today that involved 3 billion people. It was from a company, and I can't tell you the name, but they were scrubbing records, social security numbers, names from people, and they weren't even supposed to. They were a third party so they're not only in trouble for scrubbing the data, they're in trouble because they got breached. So you'll probably be reading about that. So more than ever, you need to have your credit monitored, and you definitely need identity theft insurance. It just makes sense today.
Yep.
I mean, you know, and
Well,
you should lock down all your credit union. You should lock down all your credit bureaus. LifeLock. Do you LifeLock is a separate policy? Does Farmers or your group have something similar to that for like home deed or mortgage insurance?
Mm-hmm.
Okay.
Yep, it's on you can add it to your homeowner's policy.
Okay,
Cyber
good.
protection. Mm-hmm.
Good. All right. So, Karen, we're almost finished. So
I can't believe we talked about insurance for an hour. God.
Hey, it's good because people are going to be informed more, and the beauty of it is I think we hear about insurance all the time, but I don't think we understand all the intricate details that go into it and making people pull out. Hopefully we're making people pull their policies out of their drawers that haven't looked at it in 5 years and seeing what's going on. So anyhow, we asked you before the broadcast how you like to be contacted, and we've got your office number posted at the bottom of the screen. That's the best way to reach you, right? Of course, most everybody knows you in Mansfield. I assure you of that. She's in major network groups all over town. Matter of fact, when you get done here, you probably have another one tonight about 5:30, don't you?
Yes, I do.
Okay. So, Jordan or Karen, any final thoughts? I hope you enjoyed today.
I did enjoy it. Y'all were wonderful to visit with, so thank you.
Well, guess what we always like to do on this show right before we go off air, and that is...
I do have one more question.
Fire away.
Whoever, for the people listening here, I am sure after walking through all of this, some of them are like, oh man, I don't know what my insurance policy says. Now that I think about it, I don't even remember my agent's name or what they look like. So for those people that are just probably getting a little bit of, FOMO, what can they do? Like they have a policy, but they might be interested in maybe perhaps having you take a look at it. What action should they take?
Yeah, I'm happy to do that. Just shoot me a copy of what's called your deck pages, or you can send me your entire policy. You can print it out and hand it to me at any of the meetings that we happen to all see each other at. But I'm happy to look at it. You don't even have to switch to me. I can just tell you what to tell your agent that you want added to your policy. So I'm happy to help anyone. If you want my email address to send me a policy to look at, that is KRAY and then the number 1. So KRAY1 at farmersagent.com. Multiple farmers, one agent. Farmersagent.com.
Hang on, I'm gonna type that in real quick and show it to folks. Farmersagent.com. You can double check and make sure I put it in right. Let's go ahead and put that up on the screen, and let me make sure that is right. Is that correct?
Yes, sir. Beautiful.
There you go. So use that email right there to contact her if you need help with it. She'll do comparables. As Karen is great about personality and sitting down. She likes to help people. And so there you go. And also, when she held up that QR code earlier in the show, that's a way for you to help donate to him. So make sure when you're halfway, about the 18-minute mark in the show, make sure you go back and click that QR code and donate to hymns here local in Mansfield,
Yes,
Texas.
please. Yes.
Karen, thank you for being part of the Mansfield Buzz. Remind everybody how great Jordan is about asking questions and making people feel comfortable through the process. We are, and let me run back up here and remind everybody that we can be found right here at youtube.com at Mansfield TX Buzz. We hope you go subscribe, hit the notification bell, and make sure you check out some of our past broadcasts. Karen, we'll get you some copies of this show. We're recording all the audio. Give us a couple days. Everybody have a great day. We'll see you next Thursday live right here in the Mansfield Buzz at 2 o'clock. Goodbye, everybody.
Thank you.
Bye, y'all.
Bye.